This year, last year was so bad. Like everything was down. Stocks were down, bonds were down, small cap, large cap, international, emerging markets, everything was down, crypto. So the regular folks actually did some tax loss selling. So those tax loss sales were of the horrible companies like Peloton and Zoom and AMC.
Right.
And they now are rallying in huge short squeeze. And Bitcoin, I think I have this right. Binance just had over a $500 million collapse of shorts on their platform. So we are way oversold. I'm sorry, way overbought. We are as overbought as I've ever seen Bitcoin.
You heard it right. Mark Yusko, the founder of Morgan Creek Capital Management and Morgan Creek Digital, says that Bitcoin is way overbought like he has never seen it in his life, which should tell you something. In this video, he will explain how this may be the biggest bull trap ever in crypto. So these 10 minutes are crucial for your investments. But not all are bad news. He will also make a fantastic Bitcoin price prediction and explain what the Bitcoin prices will be after all this pain. And we're sure you're going to get excited. So let's get started with macro right away, leading into crypto next.
You know, you think about the future. We got bad demographic trends, right? We got a lot of people from our age cohort, the boomers, that are turning 65 to 85 and starting to retire. And that's negative for productivity. It's negative for working age population growth. GDP equals working age population growth plus GDP. Both of those are sub 1%. So other than, cheating like by selling oil in the SPR, it's going to be tough to get greater than 2% GDP. So it's going to feel not very good. You throw on top of that the Fed continuing to tighten. Everybody says, oh, they're pivoting. Well, they haven't pivoted yet. They slowed the pace of tightening from 75 to 50. And now people are saying, oh, it's going to be 25 this month. Maybe. We'll see. But even that is still hiking. That's not cutting. And so I think the macro is still a headwind, is that. Now on crypto, I think we're in the middle of one of the great short squeezes of all time. And it's not just crypto, it's everywhere, right? If you look at this month, right, the first 3 weeks of January, the crappier the company, and crappy is a technical term, the crappier the company, the more money they lose, the worse the business, the more it's up. Peloton, Zoom, GameStop, AMC, 60, 70, 80% this month. Forget, over any meaningful period of time. We're talking 3 weeks. Now, the problem is, when you're down 95% and then you rally 80%, you're still down, in the 90s. So it's not really that good. Years ago, there used to be something called the January effect, where people would sell their losers in December for the tax loss. And they had to wait 30 days to buy them back. So in January, all the stuff that was horrible the year before did really, really well. And it was known as the January effect. And it was really small cap and micro cap names by and large. And that's where the excess returns for the year came from. Well, they changed the tax laws a number of years ago that made mutual funds sell by October 31st, not December 31st. And so the January effect got shifted to November. So if you look in the middle of November, just about every year, you have this 2-3 week period where the crappiest companies, right, the things that were just horrible all year, did really well. And you didn't get the January effect. Well, this year, last year was so bad. Like everything was down. Stocks were down, bonds were down, small cap, large cap, international, emerging markets, everything was down, crypto. So the regular folks actually did some tax loss selling. So those tax loss sales were of the horrible companies like Peloton and Zoom and AMC.
Right.
And they now are rallying in huge short squeeze. And Bitcoin, I think I have this right. Binance just had over a $500 million collapse of shorts on their platform. So we are way oversold. way overbought. We are as overbought as I've ever seen Bitcoin.
So if Bitcoin is way overbought now, What can we expect next, according to Mark?
I still believe we're in crypto spring. Crypto winter's over. We got through Hurricane Sam, which I didn't anticipate. And that's where we went. We were at kind of 18,000, and that's what I thought was the bottom. And then we had Hurricane Sam that took us down to 15. And now, when we got back to 18, that to me is spring. Spring is choppy, ugly, not really up and to the right. Up and to the right is summer. Summer's still 3, 4, 5 months off in anticipation of the halving. But, so could we have a retracement back to 18 before we head? We're not. There are a lot of people saying we're going to be new all-time highs this year. Possible.
That's interesting.
Definitely likely in early 24. Here's an interesting stat. Every halving adds a zero, meaning it increases the market cap of the Bitcoin asset by tenfold. So we went from 1 to 10 in the first halving. Then we went from 10 to 100, from 100 to 1,000, went to 10,000 in the last one. And I think, January, February next year, we go to the 100K. And we'll surpass that, because then the next one after that, brace yourselves, right, is 1 million 4 years later in 2028. People say that could never happen. No, it will happen. It's just going to take time.
But he's also concerned about fundamentals. Big hedge funds and capital managers look at fundamentals and technical analysis to make the best decisions for their customers' portfolios. And Mark is worried about this.
What Sam et al., and again, I don't think it was Sam or Caroline, I think they are useful idiots of some much smarter, bigger, sinister plot. I think that damaged credibility and confidence. And that's what new markets need. If you think of anything, think about the first time you went to put your credit card into the internet. How scary that was, how uncomfortable you were with the technology. Was it really encrypted? Would it get stolen? Was I safe? Now, we don't think about it. We throw our credit card around everywhere, and no big deal, because now we're comfortable with the tech. And yet, when there are breaches still to this day, when Visa gets breached and a bunch of data gets stolen, people say, oh, I'm not going to use my credit card for a while. Damaging confidence is what slows technological adoption. So look, is Bitcoin a better form of money? 100%. Is Bitcoin a better form of gold? 100%. Is Bitcoin the future of value transaction? 100%, right? Having a source of truth on chain as opposed to trust in intermediary financial institutions is a superior model. It just is. It's as superior as you and I using the internet to communicate instead of smoke signals or the old landline telephone, right? This is superior.
For sure.
Although I don't like the fact that it's HD. I look better in fuzzy. But I do worry that we need confidence to come back. We need some trusted parties, people with good reputation to really get out in front. I urge the Winklevoss twins to take that role. Trustworthy guys, smart guys. Okay, you could argue that Gemini made a risk management mistake by having counterparty risk that was too concentrated. You could make that argument. I probably wouldn't, but you could. And full disclosure, like we're owners. I mean, we're not big owners, but we're owners. But I like those guys, and I think they are the types of people that could really do a good job helping to engender trust.
If trust may slow the adoption rate for Bitcoin and crypto, is it the bottom end, or when can we expect it?
I'm pretty comfortable saying that was the bottom, right?
Interesting. Okay.
Look, I thought the bottom was 17.8 on June 15th. I really thought that was the bottom.
Right.
But I said I didn't see FTX being a complete fraud. That wasn't on my bingo card. So, we lost another couple grand to that. That's actually pretty good when you think about it. There were a lot of good charts that said 10 to 12 was really the lower level that we should have hit, and we didn't get there. So now look, GBTC unravels, Tether turns out to be a total fraud.
That's a different game.
Deltec Bank is running money for, some crime syndicate. Yeah, okay.
For sure. Now we got black swans.
Then maybe 10 to 12 comes into play. But I don't think anything lower than that. And I'm very comfortable saying the 15 was it, and we're back into spring. I'm not even sure we're gonna, head back through the 18 level. I think the best thing to watch is higher lows and higher highs. So as long as we keep making higher lows, I'm comfortable that we're in a bull period. This was definitely a short squeeze, right? The last 3 weeks, total short squeeze
for sure.
Now we need to see signs of accumulation. If we see signs of accumulation, that'll be really, really good. And I said, my belief is April, May is the beginning of the 9-month run through the halving. 100 is on the table, right?
Interesting.
I think we're going to add a 0. I think we're going to 10x the market cap, and we're going to, back to that 3 trillion level, and we're going to, not back to, we're going to the 3 trillion level, and I think that's coming, and it doesn't have to come tomorrow, and it doesn't even have to come next month or even by April, May. I think it's, Q1, Q2 of next year, and that 24 is the peak before we go back to fall and winter.
You're in alignment.
You got the fundamentals on one side, and then you have the monetary piece on the other side. And here's the thing: Bitcoin and gold, but because they're both one and the same, don't like quantitative tightening. They don't like money supply growth shrinking. So we actually have had, in recent months, the first time in 60 years, 60, money supply actually shrink.
Interesting.
So if, and again, that's capital I, capital F, if the Fed follows, see, Japan already pivoted. Japan unleashed a tidal wave. I mean, tidal wave of liquidity. And you look at the yen went from 153 to 128, like almost instantaneously. I mean, crazy. I mean, Kuroda-san is crazy. I mean, the dude is, otherworldly when it comes to printing money. So that was first. Second, China has increased their credit impulse, starting in kind of May, June of last year, and I think they're going to unlock from COVID zero, and I think they could stimulate $500 billion. I mean, a big number. So if the Fed follows, then that'll be good. Because the thing that people forget, one Bitcoin is one Bitcoin. We don't price it in Bitcoin, we price it in dollars. So the reason that Bitcoin goes up over time isn't because Bitcoin gets better, it's just a Bitcoin. It's because the dollar's getting worse. And so when we're quantitative tightening, the dollar got strong, which meant the price of Bitcoin went down. Now, as the dollar's getting weak, and the dollar's been in free fall, right, since October. I mean, absolute free fall. DXY just getting crucified. And so if the Fed follows through, then I see a big tailwind for Bitcoin, gold, and all stores of value.
Is Mark right in his predictions for Bitcoin? Let us know in the comments below, and if you want to see more, please leave a like and subscribe. And you may check yesterday's Gareth video too. It's crucial for what's coming. Thanks.